Hey, welcome to The Explainer. So, you've heard the buzz about Bitcoin, right? But maybe you've been wondering, where do I even start? Well, you're in exactly the right place. Today, we're going to cut through all the noise and demystify Bitcoin investing. Think of this as your guide to navigating this wild new world. Let's get into it. So, here's our game plan. First, we'll tackle the hype. Then, we'll look at the actual case for investing. After that, we'll help you figure out a strategy, talk through the risks you absolutely need to know, and then we'll wrap it all up with the key things you should walk away with. Okay, let's kick things off with the hype. I mean, it's everywhere, isn't it? On the news, all over social media, maybe your friends are even talking about it. Our mission here is to sort through all of that chatter and figure out what it actually means for someone like you, a potential investor. Really, it all comes down to this one giant question. Is Bitcoin the actual future of money, a total game changer, or is it just a massive speculative bubble, waiting to burst? Its biggest fans see a whole new financial system. The skeptics? They see a pattern we've seen 100 times before in history. This is the real tension we're going to unpack. So, with all that debate, why do people even invest in it? Well, that brings us to the case for investing. Let's dig into why so many people call Bitcoin digital gold. It really all comes down to a few unique properties that it has as an asset. The whole argument for Bitcoin's value really rests on two huge ideas. First up is digital scarcity. Just like there's only so much gold in the world, there's a limited, finite amount of Bitcoin. And second, decentralization. This is the big one. It means no single company, bank, or government controls it. It's run by its users all across the globe. And that scarcity, it isn't just a vague idea. It is literally written into the code. There can only ever be 21 million Bitcoin. Full stop. This fixed supply is a huge reason why people believe it can hold its value over a long time, maybe even acting as a shield against the inflation that eats away at the value of regular money. A really good way to think about it is like owning a piece of digital real estate. It's property that you and only you control. It's a way to hold and send value that works completely on its own, outside of the banks and governments we're all used to. Okay, that's the why. But how do you actually turn that into a plan? This is the point where you have to ask yourself, what kind of investor am I really? Are you playing the long game, or are you looking to make moves more quickly? Generally, there are two main schools of thought here. On one side, you've got long-term holding, which the crypto world affectionately calls hodling. That's basically a buy it and forget about it strategy. On the other side, you have active trading. That's all about buying and selling on a much shorter timeline, trying to make a profit from those wild price swings. And believe it or not, the term hold, H-O-D-L, actually started as a typo. Back in 2013, some guy on a forum was trying to type, "I am holding" during a huge market crash. And, well, he messed it up. But the community loved it, and now Hold On for Dear Life perfectly captures that mindset of gritting your teeth and holding on through all the chaos because you believe in the long-term potential. So, let's break it down. Long-term holding, or hodling, is pretty low effort. It's perfect for the patient investor who really believes in the tech for the long run. Active trading is the complete opposite. It's a huge time commitment, super high risk, and it's best for someone who's already an experienced trader and is comfortable with that level of stress. The big question is, which one of those sounds more like you? Now, for the long-term holders, one of the most popular ways to do it is something called dollar cost averaging, or DCA. The easiest way to think about it is like a subscription service for investing. You just decide to buy, say, $50 worth of Bitcoin every single week, no matter what the price is. It averages out your cost over time and takes away all the anxiety of trying to perfectly time the market. Okay, let's pause. We have to talk about what is easily the most critical part of this whole journey, understanding the risks. Because in this space, every potential reward comes with some very, very real dangers. And knowing them isn't just a good idea. It's absolutely essential. So risk number one, and it's a big one, is the insane price volatility. I mean, just to give you an idea, Bitcoin has had moments in its history where the price has dropped by more than 50% in just a few weeks. You've got to be ready for that, not just with your money, but mentally to handle that kind of roller coaster without hitting the panic button. And it doesn't stop with volatility. Security is 100% your job. If you lose the keys to your Bitcoin, it's just gone. Poof. Forever.
Then there's the fact that regulations are constantly changing all over the world, which adds a layer of uncertainty. And please hear me on this. This is not a get-rich-quick scheme. It all boils down to one core truth. With Bitcoin, you are your own bank. That freedom is incredible, but it comes with total personal responsibility. There's no customer service line to call, no forgot my password link to click.
All right, we've waded through the hype, we've looked at the strategies, we've faced the risks head on. Let's pull all of this together into your final takeaway. Think of this as the treasure map you've just put together for yourself. If you do decide to take the plunge, the first few steps are actually pretty straightforward. Step 1, do your homework and pick a major, reputable exchange to buy from. Step 2, learn how to move your assets into your own personal wallet for safekeeping. Don't just leave them sitting on the exchange. And Step 3, decide on your strategy, whether it's HODL, trade, or DCA, and stick to it. So let's recap. The big idea? Bitcoin is a scarce asset that nobody controls. Your approach, whether you're hodling for the future or trading the swings, has to fit you. The risks, especially the volatility, are no joke, and you have to respect them. At the end of the day, what matters is your personal strategy. And remember, this isn't us giving you financial advice. It's us giving you a framework so you can go out and do your own research. And that brings us to the end. You've got the map, you understand the landscape a whole lot better. So the only question left is the most important one, and it's one that only you can answer. What role, if any, is Bitcoin going to play in your future? Thanks for joining us on The Explainer.